Welcome back, and joining me for a closer look at what's played out on the market scene today is Imtiaz Suliman from Sentio Capital. Thank you for your time, Imtiaz. We have seen a trend of inflation that has been ticking up over the last few months. So, of course, today we got the January inflation printed that quickened to 3.2% from 3% in December. I mean, anything where you have inflation, any scenario where you have inflation ticking up is a little bit of a concern. But we are still at the lower end of the subs target range. Your thoughts?
Yeah, thanks, Anati. I think we had a bit of a reweighting in the CPI basket, which happens once every 5 years. But nonetheless, it was very much in line with expectations at 3.2%. If you look at some of the components that make up the 3.2%, food inflation was quite benign at around 1.2%. Transport was up at 0.9%. And then some of the pressures came through from accommodation and eating out, which is restaurants. So I think that's been some of the pressures in the whole basket. But overall, as you mentioned, we are at the low end of the 3 to 6% range. Whether the SARB will take that and decide to cut interest rates further, I think we might see another interest rate cut. But what clouds the whole situation is the macro environment, and certainly from a US standpoint with regards to tariffs. I think that's going to be the big factor that's going to determine whether we have more than one rate cut this year.
All right. Well, extending the thread on eating out at restaurants, we had Bidcorp coming out with its interim results today. Revenue growing almost 4%, with the bottom line lifting by 6% or 10% in constant currency terms. The share at some point did give up over 2%, but I would imagine that that dip not really significant. Your suggestion, your digestion of those numbers, rather?
Yeah, overall, it's a very well-run company with a strong balance sheet. So they've got net debt to EBITDA at 0.6 times, which is at the low end. And because of that, they can make bolt-on acquisitions. And they're one of the few companies that has been successful in making those bolt-on acquisitions. So it's not major acquisitions that puts the balance sheet at risk, and there's lots of integration that needs to be done. It's just smaller acquisitions in country that they are represented, but also finding new jurisdictions. So if you look at it overall, because the rand was stronger, that had about a 4% impact on their top line and on their earnings. Nonetheless, if you put all of it together, the different jurisdictions, Australia, New Zealand was a bit tougher. The UK was doing well, and some pressure coming out of China. Now, they managed to increase their overall trading margin by 10 basis points and pay out a dividend. So it's one of those steady counters that continues to produce good results year in and year out. It does trade at a higher rating, but very much justified because of their quality and consistency.
All right. Well, when you are at a restaurant, you either have your food with a beer or a cider. Let's talk about AB InBev that came out with its fourth quarter and full year results. Revenue surprising to the upside. We also did see an uptick in the bottom line, but volumes declining, the share surging 8% on the day. Was this a full glass of positivity?
Yeah, I think it was less bad than what the market was expecting, but there was a few good spots in the overall result.
Yeah.
And again, I think here it was the balance sheet that really shone. So the net debt to EBITDA was below 3 times, came in at 2.9 times. And this is the first time it's been below 3 times in almost 10 years, since prior of them making the acquisition of SAB. So that it speaks to the strong cash flow generation. But also on the back of that, you had very good cost control. And as you say, volumes were not great, but what came through was pricing. And the strategy of premiumization certainly came through in this period, which bode well for them. So overall, net debt's coming down, good free cash flow generation. And they said they're going to buy back $2 billion worth of shares. So that, again, speaks to that strong free cash flow generation. And I think one could expect these buybacks to continue because of that strong cash flow generation.
Yeah, well, we saw a strong uptick in the shares of Momentum today. At some point during the day, I was looking at it and it was over 12%. So a lot of buying activity there. Of course, the company did put out its interim trading statement saying that it expects its headline earnings per share to climb by as much as 55%. Not a lot of color, though, that was provided in the insurance company's trading statement. What got investors so excited?
Yeah, I think if you look at it from an overall perspective, what has been doing well for the insurers is just that the fact that they make money off higher asset bases. And because the markets have done well, the fee income that they would generate off that higher asset base would be positive. And then the one element which is also doing quite well is the short-term insurance sector. So whether it's Momentum or some of their peers, that also has returned quite strongly to profitability. And then if you look at it, I think what you would see from the results is that there's a better mortality experience. Essentially, what that means is that what they provided for in the number of claims and what they received, that would have been better. So again, speaks to better pricing and an environment that was conducive to the insurers over the last period. So again, a strong, very strong update from Momentum.
All right. Well, let us get to your stock pick for today, Imtiaz. What are you choosing?
Yeah, I'm going with Mondi. Mondi is a paper and packaging company. They've got operations in Europe, South Africa, and the US, and they produce paper packaging and bags. Essentially, they've put in a lot of capex over the last few years, and that capex cycle will come to an end in 2026. And on the back of that, I think you'll see strong volume growth, but also good free cash flow generation. So they're very well placed to benefit from that. They trade on a 6% dividend yield, and they've got good revenue prospects. I think the environment is also turning in their favor. Europe is getting a bit better from a macroeconomic perspective. And if we do have some resolution to the Russia-Ukraine war, that will help with energy prices in Europe, help with their input costs, and again help with Mondi's margins. So I think Mondi is well placed to benefit from an uptick that we see in especially in Europe and around the world.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today. That was Imtiaz Suliman from Sentio Capital.